Howdy, folks. Welcome to Liberty Call for Friday, March 28th, 2025. Hope you're having a fantastical day out there in the interwebs. It's a nice day here. It's a little overcast. It was sunny earlier, and I have, evidently, there's a weather system moving through because I had a terrible headache when I woke up this morning. So, anyways, it's a little better now. All right. Well, markets are tumbling as inflation creeps higher and consumer sentiment sinks to a 2-year low. Wall Street's digesting auto tariffs, rising prices, and a bruising 15% drop from Lululemon. Oh, no. Meanwhile, gold hits record highs as investors run for cover. So before we dive into all the news and the reports and economic data for the week, I need some help from you. Yes, yeah, you right there in the yellow shirt. I see you. Give me some thumbs up, a like, a share, subscribe, a follow, and press the notification bell. All righty. Well, let's hop into the markets. Dow Jones today was down 1.69%, 716 points. Oh, no. Closed at 41,583. S&P 500 down 1.97%, 112 points. Closed at 5580. NASDAQ down 2.7%, 481 points. Closed at 17,322. The VIX was up 15.68% today. It's at 2162. Canada down 1.6. Brazil down 0.94. And Mexico down 0.57. In Europe, Germany was down 0.98%. The UK flat, down 0.08. France down 0.93. Netherlands down 0.79. Spain down 0.84. Italy down 0.92. Switzerland down 0.08. And weirdly, Portugal up 0.75%. Weird outlier. Russian exchanges read today. MOEX down 1.72. RTSI down 1.54. And the overnight markets, the Nikkei in Japan was down 1.8%. Australia up 0.16. New Zealand down 0.11. In China, the Shanghai was down 0.67. Shenzhen Component down 0.57. China A50 down 0.51. DJ Shanghai down 0.62. Hang Seng down 0.65. And the Taiwan weighted down 1.39%. Weird day. So, I imagine a lot of it has to do with just the markets and everything going on there. All righty. Well, let's bring up our chart and look to see how we did for the week. All right. We're starting out with the Dow Jones. It's going to be down about 0.95% for the week. The S&P 500, about 1.5%. The NASDAQ, down 2.68. The Dow Transports, down 0.11. And the Dow Utilities, looks like it's going to be down about 0.7. All right. So those are the charts for the week. So looks like everything was in the red. Let me put everything back the way it's supposed to be. There we go. Put it back on the Dow and get it off the screen. All right. Let's jump into the economic data for the week. Starting out with initial jobless claims came in at 224,000. Forecast was 225. Previous number was 225. Continuing claims came in at 1.856 million. Forecast 1.89. Previous number 1.881. The Global Composite Purchasing Managers Index came in at a 53.5. Previous number was a 51.6. The U.S. Housing Price Index came in at 436.5. Previous number was 435.8. So again, you can see the pricing index has been going up, up, and up and away. House prices year over year grew at 4.8%, right on forecast, and month over month grew by 0.2, right on forecast. The Consumer Confidence Index came in at 92.9, forecast 94.2. Previous number was 100.1, so pretty big drop there. New home sales came in at 676,000 under the 682,000 forecast. Previous number was 664. New home sales grew at 1.8%. Previous number was a contraction of 6.9. And durable goods orders month over month grew at 0.9%. Forecast was 1.1% contraction. Previous number was a 3.3. Gross domestic product was revised up to 2.4% for the final number for Q4 of last year. Previously it was 2.3, and the previous quarter was 3.1%. Goods and trade balances improved from last month. It's only at $147 billion. So you can see the massive spike last month. And here's where we are today. So it jumped back a little bit. Forecast was 134,000 or 134 billion. Previous number was 155 billion. Wholesale inventories grew at 0.3%. Forecast was 0.7. Previous number was a 0.8. Pending home sales month over month grew at 2%. Forecast was 0.9. Previous number contraction of 4.6%. And the PCE price index year over year grew at 2.5%. Forecast was 2.5, right on, and same as the previous number. The PCE price index grew at 0.3%, right on forecast, same as the previous. And the last but not least, the Michigan Consumer Sentiment Index came in at 57. Forecast was 57.9. Previous number was a 64.7. A lot of stuff this week. All right, good stuff. All right, well, let's hop into our market recap right there. SP 500 slumps as hot inflation data trigger a sea red. Wall Street wrapped up a rough week on Friday with the SP 500 slipping as inflation surprised to the upside and lingering trade tariffs fueled investor unease. The closely watched core PCE index, favored by the Federal Reserve, rose 2.8% year over year in February, slightly above expectations, and January's revised 2.7%. The headline number held steady at 2.5%. The uptick has cast doubt on hopes for imminent Fed rate cuts. Stifel warned that the latest data challenges the Fed's rosy outlook on inflation being transitory. At the same time, consumer sentiment took a dive, hitting its lowest level in over 2 years as Americans grow increasingly uneasy about inflation and the economic fallout of President Trump's aggressive tariff agenda. I think people are more pissed off about the inflation. I don't know if they really care about the tariff stuff right now. It hasn't really affected us yet. All right, so sector or industry breakdown. Lululemon dropped 14% despite beating earnings expectations as its forward guidance fell flat. CoreWeave opened at $39 per share in its NASDAQ debut, below its IPO price, but closed flat at $40. And Rocket Lab climbed 1% after securing a position in a $5.6 billion U.S. Space Force launch contract. Okay. Trade tensions are once again front and center. President Trump's wide-ranging tariff plans are sparking inflation concerns globally. Meanwhile, the EU looks to tread lightly with Apple and Meta, opting for minimal fines under the Digital Marketing Act to avoid further clashes with the U.S. Investors will likely remain cautious as inflation lingers and Trump's April 2nd Liberation Day tariff plans approach. Markets are now facing a murky outlook with rate cuts potentially delayed and trade disruptions looming. The market's mood cautiously optimistic with a side of deja vu. Hot inflation and hot-headed trade policies don't mix well. All right, so that's the markets for today. Let's dive into a little bit of that data. February personal income and consumptions report from First Trust. Mr. Andrew Opdyke put this together. Personal income surged 0.8% in February, following a strong 0.7% gain in January, kicking off 2025 with a bang. But there's a catch. Most of the momentum is being fueled by government transfers, not private sector growth. January's bump came from Social Security cost of living adjustments, and February's from premium tax credits tied to Obamacare. In fact, government benefit payments to individuals have soared 7.9% year over year, one of the largest non-COVID related spikes in over a decade. Public sector wages also rose 0.4% in February and are up 5.8% year over year, far from outpacing the private sector wage growth, or far outpacing the sector wage growth of 3.2%. Economists warn this imbalance, combined with massive government deficit spending, isn't sustainable and doesn't bode well for long-term economic health. And it doesn't bode well for those federal employees or government employees, because all it does is piss off the taxpayer that those working for or on the government dole are getting a better deal than them. Well, at least that's the way it seems. A shift back to private sector-driven income would better support lasting growth. On the consumer front, personal consumption rose 0.4% in February, but most of that increase was due to inflation. Real consumption barely moved, up just 0.1% after a 0.6% drop in January. Spending on goods rose 0.9%, while services climbed 0.2%. Inflation-wise, the PCE price index rose 0.3% in February, up 2.5% year over year. Core PCE, excluding food and energy, ticked up 0.4% and is up 2.8% from this time last year. Critics argue that inflation may be even worse than reported, as the supercore PCE, stripping out goods, energy, and rents, is up 3.3%. The Fed remains cautious, reiterating its patient stance on rate cuts, but with inflation still sticky and economic reforms brewing in D.C., there's a growing concern the Fed could overreact if short-term pain is misread as deeper weakness. In housing, pending home sales rose 2% in February, offering a modest rebound. Meanwhile, the Kansas City Fed's manufacturing index edged up to -2, still negative, but slightly better than February's -5. Good information there, I think. Maybe. All right. Last up, article from Zero Hedge. The Michigan inflation expectations surge even higher as Democrats freak out. Shock. All righty. The final University of Michigan consumer sentiment reading for March came in at a disappointing 57, down sharply from February 64.7 and below the preliminary estimate of 57.9. The expectations index plunged to 52.6, the sharpest drop since 2021, and the current conditions gauge fell to a 6-month low of 63.8. More troubling was the blowout in inflation expectations. 1-year expectations jumped 5%, and 5 to 10-year forecasts surged to 4.1, the highest since 1992. But are these figures credible? Goldman Sachs and others have flagged serious issues with the survey. Inflation views are now highly partisan. The sample skews Democratic, and the shift from phone to online responses has led to more extreme answers. Democrats expect inflation to soar to 6.5%, while Republicans anticipate just 0.1, showing a massive disconnect, likely driven by political bias rather than real economic insight. The survey also showed a spike in labor market fears, with 2/3 of respondents expecting rising unemployment. I don't think that's a shock. If spending slows down, unemployment's the next shoe to drop. The highest share since 2009. Even high-income consumers grew more pessimistic, suggesting a potential pullback in spending ahead. Despite these signals, Fed Chair Jerome Powell has largely dismissed the Michigan survey as an outlier, especially on long-run inflation expectations. So what to make of this mess? With the data heavily influenced by political leanings and flawed collection methods, many on Wall Street are taking it with a giant grain of salt. Still, the sharp dip in sentiment and rising inflation worries, valid or not, could influence the markets and Fed messaging in the near term. Big question, do you trust the data or the drama? Everything's drama these days. All righty. Well, if anyone needs any, or that's everything that I had to cover for today. So if anyone needs anything from me, please go to DSAFinancialGroup.com. All your financial planning needs can be addressed there. Give me a ring. I'd be happy to help. Hope everyone out there has a wonderful weekend. Some more Astros game. Well, they're on Apple TV tonight. I have to figure out a way to watch that. And then the Cougars play tonight. Fingers crossed. And then more baseball through the weekend and more basketball. So fun time for me. Hope everyone out there has a good weekend. I'll probably do a show on Monday, but after that, I will be on vacation for the rest of next week. So there won't be videos most of next week. So is what it is. All right. Well, hope everyone out there has a wonderful weekend, and I'll talk to everyone next time. Adios.